Hey everyone, me Kevin here. In this video, I'm going to provide a new warning that I encourage all of us to pay attention to, especially if you're exposed to stocks or you're thinking about getting into stocks. I'll also make some more specific stock recommendations. First, before I discuss this warning, I just have to get something off my chest. I have to clarify this. I'm not a prophet. I am a reader. I read a lot. I get like every newspaper there is, every magazine there is, and I spend a lot of time reading and understanding what the heck is going on. This is how I doubled my money in Peloton, quadrupled my money in Tesla, doubled my money in Etsy, Apple, Amazon, 5x'd my money in Redfin, and I plan to give these same stock suggestions because I gave all of those stock suggestions before they doubled and quadrupled or whatever. They're all on this channel, and I plan to continue to give suggestions like this. But it doesn't mean I'm perfect. Remember, I recommended buying Dave & Buster's at $19, and I recommended selling it at $18.50 after the company's CEO started talking about starting a radio show at Dave & Buster's. I also recommended staying away from Nikola when it was at $70 and $80 because we knew massive dilution was coming, and I said don't touch it until it's under 40 and consider buying it as a hedge to Tesla more heavily under 30. Which is exactly what happened. Then it partnered with GM, went up on Euphoria to $45, $50, and I said, get out. The GM partnership is a big mistake. That was before all of the drama with Nikola came out, so we got lucky on the drama part, avoiding that. I pitched Purple, and I got made fun of for pitching a mattress company at $18, and it's at $26 now. Anyway, the point of this isn't to say that I'm a prophet, it's just to say that I'm a cautious optimist. When I do my research and I read, I try to do everything I can to understand risk factors and where there might be value. I encourage investing in companies that have longevity and a proven business model. But I also warn about dangers that come in the market. And that's kind of what this video is. So, for example, last week when I warned that Donald Trump having COVID is going to be a potential risk factor around day 8, 9, and 10, which today is day 10, that doesn't mean it's going to happen. That doesn't mean Trump was going to die. That doesn't mean Trump was going to get worse. It just means, hey, here's like a 10 to 15% risk factor that we should pay attention to and be prepared for. And I always like preparing for the worst case scenario. I don't like preparing for the best case scenario. That's just called a good day. And this is exactly why when Donald Trump was diagnosed last Friday, I said, hey, let's buy a little bit because there's a chance he might get better. On Tuesday, when the stimulus talks died for a moment and Donald Trump was getting better, I said, yo, course members, everybody, mention this on the channel too. Let's pick up some lemonade options because this is, this might be a buying opportunity here. Those options are up like $30,000 in the last 4 days for me. And I post these in my course for course members in the money and stock course, just anytime I execute a trade. But anyway, I have a new warning. I'm gonna show you a chart here, and I want you to tell me what you think about this. This is my new warning. So this is the chart here. Let me go ahead and remove myself just for a moment here. This is the chart. We've got a red line here and a blue line. We don't know what this mystery chart is. But I mean, the way I think we would describe this overall pattern is that we had this sort of up here in the middle, and then this down, but then all of a sudden we've got this recent inflection point right here where the trends of these data lines, the trend lines, are moving up again. Let's go ahead and, if I told you that this was 12 months, let's go ahead and zoom in here to 90 days. It's the last 90 days. So last 90 days, we've got this relative decline here, which is good, but then all of a sudden, right over here, we've got this inflection point going up again, which is kind of what we're seeing here when we look at this on sort of this 12-month period, and this is a 90-day period. Well, if you haven't yet guessed, which is a good chance you probably already have, take a look at what's happening with Google Trends search data for COVID symptoms and COVID testing. Now, when I first said, folks, in the summer, I see COVID testing and COVID symptom search trends trending down. That's good for recovery stocks. And I started buying more recovery stocks in July, which I sold off in August. I mentioned pay attention to this COVID symptoms and COVID testing trend data. And there were some people in the comments that are like, oh, but Kevin, the trend data is just going down because, well, people know what the symptoms are and people know where to get a test. Okay, well, if that were true, why over the last period of time here, this is probably the last week, are we seeing an uptrend again? Okay, let's zoom in here to the 90-day. Same thing. We're seeing the uptrend start right here at the beginning of the month. About 10 days ago, we saw this uptrend start. This is very dangerous. This is something that we have to pay attention to. We do not want to end up like Boris Johnson and the United Kingdom. Let's just read a couple things here. In July, Boris Johnson recommended that workers return to their offices. And instead of having a broad-based plan for COVID in the United Kingdom, their strategy was called a whack-a-mole strategy. Well, folks, the moles are winning. That is, now you've got people in the United Kingdom saying, quote, "We need a total lockdown." Yes, tracking and tracing has failed. Infection rates have jumped. We took the brakes off too early. People don't adhere to the minimal rules we have. It's the Financial Times today, Saturday edition. It's not good. It's not good at all. But this chart here, this is United States data. We're just seeing this in the United States now, and this is a leading indicator. In fact, you want me to really freak you out a little bit? Here I am talking about the United Kingdom, right? Well, Kevin, if COVID symptoms and COVID testing search trends actually matter, then we should see a spike and then some sort of either continued spike or decline in the United Kingdom, right? If it's a leading indicator. Well, don't fall off your chair, folks. Here you go. This is the United Kingdom for COVID symptoms and COVID testing. It's good that we've got a decline here, but this spike, remember, folks, the peak of the spike here is somewhere between, there it is, September 13th to September 19th. This is a leading indicator. Now they are complaining about a total lockdown roughly 3 to 4 weeks later. So the spikes tell you danger signs 3 to 4 weeks early. Let's go back really quick over here to this chart. If we see a spike now, and we continue to see this spiking sort of on the 90-day here, then it could potentially be right before the election that we actually start having a substantially more serious outbreak of COVID that actually shows up in the data, in the case counts. Because remember, you could have symptoms today, but you might not actually think, oh, do I have to get tested? I don't know, maybe I'll get better, people get worse, oh crap, I'm getting worse, maybe I should really get tested. Right? Those things take time. The testing stuff has to be aggregated. Sometimes the tests take 3 days to get back, depending on the type of test you do. How accurately are they counting the rapid tests? How quickly are those getting reported and then reconciled and then provided to the public? It's a complete disaster. This is just something to be cautious of. And now I'm gonna get into some specific recommendations. First, be very, very careful of recovery stocks, airlines, cruise lines, restaurants. We thought that testing would work. There was a headline just yesterday in the New York Times, airlines plan to go back under new testing regime. And I'm thinking to myself, what did we just learn at the White House? Testing don't work because you could be contagious and have no symptoms, but be spreading COVID like crazy and test negative on a rapid test. It's not good. On the first day you exhibit symptoms, you are still 30 to 40% likely to test negative, according to MIT. Also not good. So airlines, cruise lines, restaurants, testing ain't gonna bail you out. It's just not gonna happen. So these are things to be cautious of. Now, I have to say, I did run through a mall the other day, masked up with my P100 and my big filter respirator. I got lots of looks. The malls are dead, and it's scary. A lot of this is obvious, right? But keep these things in mind if you're thinking about investing in Delta or Simon or Cheesecake Factory. And look, they got curbside pickup and delivery, you know, those are things helping them a bit. So you got to give the restaurants some credit for doing the curbside pickup. That's been very, very good. So if anything, you know, maybe the curbside or the drive-through stuff is okay. This is why Chipotle with the Chipotle lanes or whatever, that's not what they're called, but the Chipotle lanes are doing so well. But these increasing COVID cases for companies that don't have that flexibility, like travel, hospitality, and some retail, are going to rob profitability from these companies for years to come. On average, I anticipate that every 6 months we're in this pandemic, we are going to lose 2 years of profitability from these companies. We're already on we're 6 month set number 2. That is, it's already been 6 months, and now we're on the next set of 6 months. So keep that in mind. On tech, in my opinion right now, the goal is to focus on safety first. I'd rather be diversified into multiple different tech companies than going all in on something. It's not a good idea. I'd rather be in Apple than some brand new energy company that comes out and, let's see, releases a press statement that says, we're going to get into the business of making electric vehicles and charging stations. But dude, you've been losing money since 2015. You know how to produce solar panels, but you're sucking at that. And now just because you're getting into the electric vehicle space and charging station space, people are supposed to believe you. The speculative stuff, just be careful. I'm not saying there's not a lot of money to be made out there. Just be careful. Right now, this is the kind of market where I'd rather pay a slight premium over my buy targets for safety. But I'm also going to do that in a diversified way, I'm not going heavy on Tesla right now individually, but I will buy Tesla as part of my 1337 portfolio, which I've got a couple updates for that for you. I'm also only buying on the dips, which is kind of like, come on, Kevin, we know this. Okay, buy on red, buy on red. But I just want to reiterate this because when you see the stock market go green, 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 it's kind of hard because you think to yourself like, oh man, just missed out more. Oh man, just missed out more. Just be careful, okay? Like no guarantees that we're going to see, this second wave crush recovery stocks or cause softness in the tech stocks or whatever. It's just something to be cautious of. And this is why I'd rather put money, and I am investing, I'd rather put money into tech than recovery or speculative. That's all I'm saying. I'm also socking away cash every day we see this green. And yeah, sometimes I go, man, if I just put some of that cash in the market, it would have had so much more money today. And I get that. But I also got to be realistic that I'd rather have a cushion and safety net, especially if you've got margin outstanding. Just as sort of an update, I'm about 2 weeks away from being at zero margin. Completely paid off. And I'm very, very excited about that. And then I'll only draw on that money if I have to close a real estate deal. And then the goal is to pay that off right away again. So now, on which stocks to buy, first, go to metkevin.com/1337V11. Right now, I'm working on version 12, and here are kind of the things that I'm thinking about changing for version 12, and then you could always update version 11 to 12 pretty easily by just rebalancing the percentages. It's pretty easy to do. I'm probably going to include Intel because of their Mobileye acquisition, that Israeli company that basically handles all of the self-driving for companies like BMW and NIO. It's a good play. Intel also manufactures their own chipsets, which I think is actually a strategic advantage over NVIDIA, for example. And even though I love NVIDIA, NVIDIA's obviously been substantially outperforming Intel. I can't look at the past. Right now, I'm looking forward. We have NVIDIA in the portfolio. We don't have Intel in the portfolio. So I'm still working out the details of that. EXPI, the real estate company, EXP, paying attention to this one. They've got a great model. I don't know about 20 years from now, but at least for the next 10 years, EXPI seems really interesting. And then I'll rebalance a couple of smaller positions. And usually what I do is when a certain stock skyrockets, I reduce the allocation, and when a stock plummets, I'll increase the allocation. For now, though, really buckle up. Limit margin, the second wave, it's concerning to me, and the trend data is starting to turn up. It's not skyrocketing yet, right? We're not seeing what we saw in the UK yet, but it's certainly trending up. So keep that in mind. This trend data is a leading indicator, and it tells us what's coming. It's very important. And no guarantees. I'm not a prophet, just providing information. That's it. So thank you so much for watching, folks. We will see you in the next videos. If you like this sort of information, make sure to check out my detailed analysis and my courses on real estate investing, stock market investing, my psychology of money course, and of course the do-it-yourself property management and rental renovations course. Really, really great programs. If you want to make YouTube videos, there's a YouTube course as well. And folks, we'll see you next time. Thanks.